Krishishnik with eXp Realty in the Krishishnik Group. I am a full-service residential realtor licensed in Maryland, Virginia, West Virginia, and DC, and I love to help people buy and sell homes. You're going to have to excuse me. I've got a little cut on my finger right now. I was cutting some cantaloupe up from the garden, and I accidentally nicked my finger, so I'm going to do a lot of this today, and I apologize. But we're in my buyer series right now, and the next thing we got to discuss is pre-approval. Like, what's the first step you should take when you're looking for a home? You need to determine your price range, the price range that we need to set up a search in or that you should be looking in, okay? And you need to truly sit down with a lender, preferably a local lender, who's going to sit you down and educate you on the mortgage process and the types of financing available to you, okay? I know there's online lenders, there's a lot of good ones, but you need to be well informed, okay? Consume whatever content you want. Look on YouTube, look all over the place. I think a great lender that comes recommended from a realtor or from a family or friend or an associate that you trust is a much better resource to better advise you than an online lender that you will have no ties to, okay? So first of all, I would get your information from the horse's mouth, okay? Why do we need a letter? Well, we need to know what your purchasing power or range is, okay? I can set up a search for you, but if you're only pre-qualified for $300,000 and I show you $450,000 homes, you're going to be a little bit upset by that. And then when we readjust down, your expectations are going to be different and everything. So we want to first identify what your price range is, okay? What are we looking for? A local lender. Maybe not an online lender, maybe so. Let's discuss that with your realtor or with somebody else. There's a difference, the types of pre-qualification, okay? There's pre-qualified, there's pre-approved, and there's underwriting approved. Pre-qualified is that you had a conversation on a phone call with a lender, he wrote your information down, he looked at your stuff, kind of put it in the system and didn't do an actual application on you. He didn't look at your documentation like your income, your bank statements. He didn't pull credit or anything. He just had a conversation with you, and based upon what you told him, he'll qualify you and he'll issue you a letter, okay? Pre-approved typically means that a lender has spoken to you, he's received an actual application and documentation, and he's processed your application through the direct underwriting system, and that system has spit out a price range and the type of financing that you're eligible for. That's a good one. Underwriter approved is the last one. Underwriter approved means that the loan is completely in its package. Like the entirety of the loan is already done. It's been sent to underwriting and underwriting has signed off on it. The only thing we're waiting on is the property information and the appraisal. That's the best type of pre-approval letter you can get. And we don't see those too often because that does take a lot of time. And most underwriters are busy processing files that are under contract, going to close, or refinancing and going to close. Again, I'm going to hit on choosing a lender. You want a local lender. I would recommend a local lender. There's online lenders. I've done Rocket Mortgage. I've done Veterans United. There's all of those online lenders. Even Navy Fed. I'm not trying to call out any specific lender, but your best bet is to work with a local mortgage professional recommended by your realtor or by somebody that you trust and can recommend a good mortgage guy, okay? What you're gonna do right away when you meet that person is you're gonna actually submit an application. They're either gonna take your application over the phone, or they're gonna have you come into the office, or they're gonna send you a link to the application. And you're gonna fill that out. Then you're gonna send them the supporting documentation, upload it into their portal and everything, and get the ball rolling on all of that. They'll verify your information is correct. And then they'll get you a price range and talk about the types of financing that is available to you, okay? With that automated underwriting system, they're going to pull your credit. They're going to look at your debts, credit card debt, automotive debt, if there's any other mortgages, student loans, all of that stuff. They're going to also look at your credit score, and they're going to see which loans that you qualify based upon those factors, okay? And then they're going to give you that information, then we'll work backwards from there to what is your best option, okay? What kinds of financing are there? Okay, there's conventional financing, there's VA financing, there's FHA financing, there's USDA financing. Those are the four main ones. And then there may be specific portfolio financing that we really don't want to get into, okay? Maybe a bank, like a local bank or a bigger bank, has some type of portfolio product that is like a mortgage, that is a little bit different, that may give you different terms, which are all good, but we just need to explore them and have a conversation about how they're going to look, okay? All mortgages, if it has less than 80%, is going to have mortgage insurance. In addition to property insurance, you're going to have mortgage insurance. So FHA financing is 3.5% down at a minimum. USDA financing is basically FHA financing with the USDA giving a grant for that down payment of 3.5%. In addition to that, you're going to pay mortgage insurance for the life of the loan on FHA or USDA financing. Conventional loans could be 3% down, in some cases 5% down, or whatever you can determine with your lender. But if it's less than 20% equity in the home, as in if you have a $100,000 home and your loan amount is more than $80,000, you're going to pay mortgage insurance based upon that difference. The only difference is with conventional financing, once you get above that 80% equity in the home, you will stop paying mortgage insurance, which is why I like to recommend customers pay the extra fees, the extra mortgage insurance for conventional financing versus FHA financing. That's if you can't afford the 20% down payment. Real quick to talk about VA financing. VA financing is the only financing that gives true 100% financing without mortgage insurance. But you have to be a United States veteran or a prior service military or active duty military in order to qualify for VA financing, okay? So to recap, pre-approvals, you gotta talk to a lender. It's so key, it's so important. Make sure you talk to a lender. Get yourself pre-qualified, okay? Have a conversation. Don't work with any old lender. Work with a lender that is recommended by somebody that you have put your trust in. Doesn't have to be your realtor. It could be a family member or a coworker or anybody you have, okay? I would recommend local. That's not a hard and fast rule, okay? But I would define your financing before you go out and look at homes, because that helps everybody along, okay? In addition, when the offer is submitted, we're not scrambling around at the last second to get you pre-approved. I hope you liked the video. Please give me any feedback. Any questions, you can direct message me or interact with me on the page. Please follow all my social media, and I hope you all have a good week, and I'll talk to you soon. Thank you very much.